and we're just reviewing the tag terms of reference with the governance group at the moment. So we're hoping to formalise George's position once we've done that. But welcome to the discussions today. Um, Karen, anything else?
No, I would like to pick up a couple of things at the end of the meeting, particularly
Okay,
around the September meeting. But the apologies that I've received, I've already given to you. I haven't received apologies from anybody else.
okay,
Sorry, one other apology I should make is Paul Mason from the staff side is on leave at the moment. You will note that he has authored two of the papers for today. Sarah will be picking up one of them, and I'll be picking up the other paper.
okay. So thanks to the two of you, and some well-earned leave there for Paul. Um, okay, so with that, let's move forward then into the discussions on the feedback on the grant model and thoughts on the way forward. And I think Sarah, is that the one that you've picked up on Paul's behalf?
Sorry, I forgot to unmute myself. I was nodding quite happily there. Yes, I did indeed. I would preface this with I'm a little short on the history of all this. I'm looking at the grant expenses area, so I'm hoping I'm off enough. But Karen will pick up any historical or anything that I might miss if that's okay. Um, So the paper focuses on the grant model, which is in, just to remind us for everybody, section 23 part 1 and section 24 part 1. So it includes the accounting requirements then for both grant expenses and the grant from the grant awarded body and grant recipients. The model separates grants into two groups, enforceable grant arrangements and enforceable grant and OFAs. EGAs, enforceable grant arrangements, are where both parties have the rights and obligations, and the funding arrangements comprising of all the other grant arrangements. This analysis is considered whether respondents agreed with the model, and as a whole focuses on SMC 4A and 5A, and that's both then from the grant recipient and the grant expenses perspective, grant awarding body's perspective, and they're reported. Those results are reported in the annex, and that had a 73% agreement rate, so it's very positive from that perspective. There are still, though, a number of issues regarding classification of grant arrangements as either EGAs or OFAs, which were raised by those who both agreed with the model and those that disagreed with the model. Issues related to fund accounting as well, and also around enforceability. The issues have been considered by PAG as well. I will note that in terms of the agreement, if one or other, because we're looking at a question of SMC 4A and SMC 5A, agreement would be considered even, or disagreement was considered if one, either 5A or 4A disagreed with the model. So there was a further question supported it, whether all grants could be classified as EGAs or OFAs, and over 80% of respondents agreed with those models. So I don't know if you want to stop there on any overall comments, or shall I move on to the issues there, Ian? It was just an opening gambit on.
I think let's just check whether there are any general comments. I mean, I think overall it's important to keep the perspective on the fact that we have had high levels of agreement, even although there are specific issues that people are raising. But I think that's important to hold on to, given the debate that we had earlier in the process. Any general comments before we start to move into the specific comments and recommendations from the Secretariat? Okay. So Sarah, move us then into the specific points that
Absolutely.
are raised in the paper.
Thank you. And so to the issues, the recognition and measurement of all OFAs is the same, but presentation of the revenue of grant expenses and fund balances depends on whether restrictions and how the funds can be used. When the fund accounting arrangements, which will commonly relate to revenue rather than grant expenses, take into account, there are three distinct accounting outcomes. So there'd be OFAs with and without restrictions and EGAs. So issues arise, therefore, whether there are two grant categories with three accounting outcomes. And some respondents questioned the approach of having two grant categories with the three outcomes. And some respondents considered it preferable just to have three grant categories, dividing out the OFA category into two, OFAs with restrictions and OFAs without restrictions. Other respondents commented on terminology, and they are presented in the report about what they said. Respondents also raised concerns about the enforceability and how enforceability could be identified and related to determine the enforceable grant obligation. A particular example, although there are others in Annex B, is where best endeavours are used and agreed by both parties as satisfying the obligation. As I said, other examples are included in Annex B. Perhaps, though, the most pervasive issue is the distinguishing feature in determining the correct accounting treatment and in the existence of an enforceable obligation. Respondents commented on the single grant arrangement could have elements that included enforceable grant obligation and other elements where there were no enforceable grant obligations present. These different elements would require different accounting treatment. And when we had the meeting at PAG fortnight ago, last week, can't quite remember, time flies, but they supported that concern. So in our suggestions to respond to that, we would preface those comments that we're not changing the overall model. We're not suggesting that it's the identification. We're not seeking to change the identification of rights and obligations. We think the treatment is correct and supported conceptually, so not trying to change the overarching treatment. What we think might be useful is framing the accounting requirements using its starting point, the classification, not the starting point as a classification of EGAs and EGOs, which might be counter to the original intention. What we're looking for is the identification of the unit of account. And despite the level of agreement with the SMCs, there appear to be confusion with the accounting and terminology. So we'll be looking at the distinguishing factor from the revenue recognition, the grant expenses model, is whether requirement or an obligation of a grant arrangement creates a present obligation on the grant recipient. So we're suggesting framing the model around the requirements for the grant obligation rather than the classification. So it's a different starting point. This should then address the issues around whether a single agreement contains different types of obligation. Our suggestion is to have, and we think that maybe the terminology might move around this, but this is our original gambit on this, is to have a performance obligation, a performance grant obligation for those obligations that have a present obligation and a requirement for all other types of obligation. And there would also be no requirements in some grant arrangements. Recognizing performance obligations is a term, that's why we say this is our gambit in IFRS 15. And so we're not suggesting that's where the terminology should finally land. The model would still focus on enforceability, but the issues, the concerns we've raised, we'd look to seek to address those, perhaps as a part of that, but also as a part of looking at these with drafting as well. Do TAG members agree with, so then we're moving on to the questions 1, 2, 3, and I don't know whether we want to go through those individually.
Well, I think at this stage, let's just get some reactions from PAG members, because there are a number of options for moving forward, and I think it's important just to get a sense of, whether TAG members feel change is needed, and if so, what sort of change, rather than to land on particular terminology or anything like that at the moment. So if I can just sort of open up for comments. Karen, did you want to come in just quickly?
Yeah, I did. I think this is a really interesting point, and I think it's where what we intended hasn't kind of landed in quite the way we thought it was. And we came up with the terms EGA and OFA when we were thinking about the obligations in the arrangement, because it's the obligations that drive the accounting treatment. And I think that as this is being talked about, and the discussion has gone on since people responded to this, it's clear that what people are trying to do is to classify a grant arrangement. So they're going, I've got this arrangement, and they're trying to say, is it an EGA or an OFA? And that is fine where they've only got one obligation or all the obligations have got similar characteristics. It doesn't work when an arrangement includes different types of obligations, some of which are a present obligation and some of which are not. We were trying, I think, when we developed this to find a term to help people understand. But I think actually what we might have done is drive people to think about the agreement rather than the substance of the agreement, which is really where we want to land. And so, as Sarah has said, we think that there may be kind of a unit of account issue here that we need to discuss rather than is the model flawed? Because I don't think anyone is disagreeing with the idea that some transactions are a present obligation and some are not. There is no suggestion that that's not appropriate. It's just thinking about how practically you operationalize this and therefore is the unit of account right.
Okay, thanks, Karen. So Jeff M, if you want to lead us off, please.
Yeah, thanks. I will. Remember, we had a lot of conversation early on about this model versus where a number of the national standard setters are with a condition type model, and particularly about performance conditions. And I actually like the idea of this change in unit of account. I do think this would simplify things. One concern would be if we get into performance obligation as opposed to something broader type of obligation, is it's not always about performance that creates conditions, prerequisites to entitlement. You sometimes could have things that have to happen before you're entitled. So that would be about my one concern. Otherwise, I actually do like the idea of moving towards this type of a model, which focuses on what are the what are the prerequisites to entitlement.
Okay, thanks, Jeff. Freddie, to you.
Thanks. Similar to Jeff, I do think that, yeah, obviously we have gone through the journey and absolutely it's fine. It's not the easiest. It's probably the most important revenue recognition as we know here in Australia for not-for-profit entities. So similar to what Jeff said, at that obligation level, when I was reading the paper, it does take it probably closer to where we are, but it then raised the question, so what is the distinguishing factor between present obligation, whether we call it performance obligation or some other term, and other obligations? And again, reflecting on our experience here, we have the distinct, which is, I think, the terminology from 15 and I think in IFRS for SMEs, and also the notion of transfer. But as you would know, because I was probably mentioning it on every other call, to apply those factors, both distinct and transfer, maybe not as easy in not-for-profit than in for-profit space. And what I don't know is whether we landed at that agreement because it was maybe more palatable from not-for-profit perspective. And if we are, which absolutely I agree, makes sense to step down to that next level of unit of account being obligation, whether we are then facing those complexities, how to distinguish between, say, performance obligation and requirement with restrictions. Now, with that, so I would probably agree that, yeah, it's makes sense to change the tag a little bit, but not sure whether we will be facing different set of challenges. And when I was thinking about it, then the question was, so if we have 80% of respondents that agreed, and is this our response to the 20%, or is it 80% agreed at a high level, but then majority of those 80% actually did have a concerns with this? Because obviously we want to make sure that it's not necessarily consensus or election, but we also need to pay attention who said what. I guess. So I'll stop there.
Okay, thanks,
Thanks.
Freddie. Karen, you wanted to just come back on what Freddie had said.
Yeah, I think Freddie, you raised some really interesting thoughts and points that we've been kind of looking at. To the latter point first, I think that many of those who did agree made comments along the lines that suggested that there were some underlying things that were there. I think we're also reflecting on conversations that we've had that have been kind of outside the formal comment letters where some of these things have recurred. But I think the critical point is the one that you've raised. It's about what defines a present obligation from another type of obligation. And I think the line that we took when we developed this was around enforceability. I think that it does get reaction across the sector, particularly when we've defined the EGA as having both parties having rights and obligations. That we frequently hear about the power imbalance and that the donor can enforce, but a grantee can't. So I think that has generated conversation, around that. But I think in terms of, whether something is a present obligation, there needs to be something hard that makes it something that an NPO or any organization can't escape from in order to be entitled to the revenue. So I think as much as there are some challenges around it, I think that we will continue to look at enforceability, unless we can come up with something better, as being a way of defining what creates a present obligation.
Thanks,
Okay, and that
Karen.
makes sense. Sorry.
Yeah, go ahead, Freddie.
I think that's helpful. Thanks, Karen. I think that enforceability, it's good that it's clear that that's the distinguishing factor because, for example, it's then different to say, for example, what we have here, and I guess the team will test whether if we attach enforceability to obligation level as opposed to agreement level, is there something left for requirements with restrictions, and why, for example, they will fall out of enforceability and therefore will not be present obligations. Okay, thanks.
Yeah, thanks, Freddie. I mean, I think maybe, clearly there is a question about, is it the agreement or is it the particular requirements within the agreement? So I think we're going to have to address the unit of account issue and make sure that people are clear that where there are basically, you've got a couple of different sets of, if I call them requirements within the agreement, that you have to actually break those out. So there's clearly an issue there. Inevitably, I think one of the things that will happen is just the whole issue around change and the fact that there hasn't been a standard, and therefore, over a period, you would expect if people are implementing this guidance, then they'd want to be clear around certain of the requirements. That said, though, the point about the question about the power balance, I think inevitably, if we'll need to think about what additional guidance we give about the operation of the model there, in those circumstances. Other comments? Daniel, hello, welcome.
Thank you, Ian. Yes, I agree. I agree with the model. I think in the model it's fine. And in effect, I think the problem is the confusion about the new terminology. And of course, everybody is very familiar with the use of the term restrictions, and I think the confusion is just that the linkage with the restriction concept. So I think the model is fine. So we have to clarify more if there is a relationship between these two terms and what kind of relationship they have. I think with that, for me, it's enough to clarify that relationship.
Okay. Thanks, Daniel. And I think one of the other things we will have to think in terms of just reflecting on the labels is make sure that those do actually translate or they're capable of translation in a way that picks up the nuances. Bill.
Yeah, I was going to say, even if we don't change the terminology, maybe we need to acknowledge and make reference to the terminology of performance obligation, et cetera, because I absolutely agree with what Danielle just said. There's no need to change it, but we need to try to eliminate this confusion that has been created inadvertently. And so maybe it's just a matter of referencing the terminology that currently exists in IFRS 15.
Yeah,
Thank you.
thanks, Bill. I mean, picking up on that, perhaps just sharing the experience that IPSASB had in this area. We originally started out with two potential standards, one an IFRS 15 aligned standard and one a successor to the non-exchange revenue standard. And in the end, we actually combined the two because it actually helped. And we've got an inherent issue here in the structure of the IFRS for SMEs. So that, essentially we've got one group of transactions where it is IFRS 15 aligned, and therefore it's appropriate to use performance obligation in that sense. But the problem we have with the there are other transactions which we've called enforceable grant arrangements, which don't fit the definition of performance obligation in IFRS 15, and therefore that's where I think we do have to use different terms and be clear on the reasoning for using those different terms. So actually, it's one of the things that IPSASB has really concentrated on in recent years is where it's the same as in IFRS, use the same terminology, where it's a slightly different concept, use a different label and explain why it's different. And I think we do have something different here. So probably we shouldn't talk about performance obligations if we don't actually mean those. We need a different term and to be clear about how that relates. Karen, did you want to come in before I go to Ihanyi?
Just a very quick question. I just wanted to clarify with Bill and with Daniel. Are you saying that you don't think we need to move from EGA and OFA to talk about the obligations, or are you agreeing that we should reframe around obligations? I just wanted to check when in your responses.
Personally, I don't think you need to change. I was talking about what Ian just said, maybe make reference to, and I agree with what you just said. If it's the same, it's the same. But as Jeff said in his original comment, sometimes this is not an enforceable grant agreement may not have a quote performance obligation. So don't call it that, but acknowledge that it exists and make a reference. So I would not necessarily make the change, Karen. That was my thought.
Okay, thanks for that clarification, Bill. Daniel, I see you nodding as well.
Yes, I agree with it.
Yeah.
I think it's the same. Yeah.
Okay, thanks. Ihanyi, to you next.
Yeah, I quite align with Bill, and I think accounting is accounting, no matter the area you are looking at it. So I learned that there's no need to change. What we require really is to ensure better clarification so that both the users and the preparers will be able to. That's my own. Thanks.
Okay, thanks, Ihanyi. So, I mean, I think unless anybody disagrees, I think the sense I'm getting is yes, we need to concentrate on communication here. We certainly do need to pick up the unit of account issue as part of that, because clearly that hasn't resonated with constituents. And then I think we do need to think about the terminology, just reflecting on the comments made, whether we can clarify that. Probably one of the other things is just picking up as well, as we refine the further thinking that we did in, we've done an exposure draft 3 as well, because obviously we have moved our thinking on there in terms of some of the presentational aspects and the whole idea around restrictions. Other comments then? I might just apologies for putting you on the spot, Tim, but it might just be useful because obviously you had the conversation in the PAG. Is there anything else you want to play in at this stage if we move forward in that way?
No, I was just trying to think. I mean, Karen, who was at the PAG, I mean, there was a lot, it was one of our most hotly debated areas, but obviously with different viewpoints. So I think what I take away from it is that if this shift in the unit of account will help a lot of people be brought along, and then the fact that there ends up these 3 possible accounting outcomes, I think most people will come along with that, and then it's just trying to get a more simpler way of enabling people to get there. It's really what practitioners want. Without getting, that's where people are getting lost, is in the complexity in the terminology. I think if we could shift the unit of account and we can have 3 outcomes and then some simply applied rules-ish, principles-ish about how people get there, then everybody will over time get used to it and it will greatly help. But there's going to be quite a lot of resistance because people will pick out things they don't like in the terminology or other things initially. I think we just have to accept that there may be some resistance, that we're going to have to really use communication to bridge the gap.
Mm-hmm. I mean, thanks, Tim. I think that's helpful. And, certainly thinking about the examples, it's one of the things where when IPSASB was looking at this, we worked quite carefully with the UN system, who are direct users of IPSAS. And they came up with 3 or 4 generic types of transaction, which we work with them on. And I think, that may be helpful, just to think quite carefully about the examples that we pick, and how we provide that, that implementation guidance and implementation examples, reflecting on the feedback that we've had. Okay, I think that's helpful to have had that discussion, because obviously the idea is this is going to come back for September. So I think it's helpful to get that direction from the tag. Then perhaps Sarah, move us on then into the next question.
Thanks, Ian. Yeah, and the next issue is again, it's around, this is more around accounting concepts. One of the respondents did not support the application of the model for grant expenses. They did not consider the donor's right to the recipient's future performance would give rise to an asset. Although the obligation to perform the right would be a liability, they accepted it would be a liability for the grant recipient. And some PAG members expressed support for this view. We looked at the basis conclusions in IPSAS 48, and conceptually we feel that it does meet the definition of an asset based on that future performance. It does give rise to an asset because of the various elements of the definition of an asset. It controls the resource, and based on a past event. So we think that it is an asset, but we accept that it is probably a moving is it moving modernization in terminology about what the definition of an asset is? It is different, but we would agree, would seek tax views as to whether or not they agree that the right to the recipient's future performance gives the rise to an asset.
Okay, thanks, Sarah. Karen, you just wanted to add?
Just to add to that, I think the PAG members that commented on this were all of the view that if they would expense it as they incurred it, and therefore, even though conceptually there might be an asset, that's not practically what they would do. They would just expect everyone to expense it straight away, and that and I think they were the view that that was an appropriate outcome. So I think that there are some, I think, as Sarah has said, we think that this is conceptually sound. I think there are, I think there are a couple of things that we could consider about this. One is whether there is some kind of simplification that you could put in that bypass the step if practically it's not going to be used, or we can use the implementation guidance to provide factors to consider about whether an asset exists, which might prompt many to expense it straight away in any case. So I think there's some things to think about there.
So just to pick up on Sarah's comment before I open it, the conceptual frameworks have moved towards a rights-based approach to defining assets, and I think from what I've seen in the update that IPSASB's done in its framework, and in line with where the ISB has gone, I think the rights-based approach is reflected here. So it's probably, personally, I think it's probably more in the implementation guidance and helping people think that through. Again, I think we probably have to think about this in the context of some potentially changes to current practice and expectations. But I'll open up for comments. Tim, again, perhaps you might just want to share whether there's anything additional from the PAG discussions that is relevant here.
I think Karen's caught it. I think in what she's saying is that, I mean, I think some people put it stronger, but because the practice would be always to expense this, then will be subject to ridicule for suggesting there should be an asset. Yeah, that would be the strongest version of that argument, I think.
Okay. Daniel, Freddie? Daniel first.
I think this definition of asset is a very controversial point in some organizations. Precisely last week, I had a conversation with the representatives from a religious organization, international, and they are thinking of not recognizing building assets because they think it's not good to increase the amount of the balance sheet with assets that they don't think give an economic benefit, and they're not going to be sell never. So I think it's very important to point out about the concept of not economic benefit alone, but also the importance of service potential that we have had conversations about here in this group. I think the definition of IFRS right now is a little complex to understand, and is focused on, of course, a lucrative entity. So it's, in my point of view, a little difficult to use the same definition um, for NPO. So I think it's important to review the definition and to adjust it to reflect better what a not-profit organization needs.
Okay, thanks, Daniel. Freddie, to you.
Thanks, Ian. So I think I actually went back to our submission on IPSAS BED 70 or 71 or 72, one of them.
72.
And yeah, 72. And we actually did not have at the time any specific comments in disagreement or on the conceptual grounds. But I'm aware that obviously the notion of the obligations did change between exposure drafts and the final standards. So I think our board will look into this again, because especially with those transfers for, I would call it internal use. And I'm assuming that the asset is in relation to the performance obligation, but not necessarily requirements, as if they will call them, whether with restrictions or no restrictions, right? So after all that, I do recall that we had some concerns from grant providers side on the practicality of those requirements, and they were not necessarily small, not for profits. Quite on contrary, they may have been even public sector or government entities being the grant providers, and at least some of that feedback was they were not necessarily too keen to put those assets on the balance sheet with everything else that comes together with that, including impairment assessment and otherwise. So I do see the point, and I'm actually only surprised that it only came from one respondent that there are concerns. So question then is, I think for the project is, I think on conceptual grounds, we can get there. Practically, if majority of respondents didn't have issues with that, do we need to reopen? Because I think then a question of potential then re-exposure comes to mind if we will start amending proposals, despite only in this case probably a minority had some concerns. Thanks.
Thanks, Freddie. So I think where you finished is probably the right one in terms of actually it's only one respondent. But nevertheless, I think picking up what Daniel was saying, and also the point that Freddie made in terms of certainly when IPSASB looked at this, there was a refinement, there was a difference in the proposals between the exposure draft and the final standard IPSAS 48. Which did look at some of the practical issues. It was also linked with the finalisation or the update of IPSASB's conceptual framework. So I think probably the way forward on this might be to sort of have a look at the updated definition of assets and also present obligations as they landed in the IPSASB framework, because that does bring into account the point that Daniel was making about service potential. There are, from memory, I think several parts or several things to consider in the definition of an asset, and maybe the thing to do is actually think those through in the NPO context in terms of how would that help us to provide additional clarification that would address the sort of concerns that Daniel was raising, and I think we're coming as well from the discussions in the PAG, so that we're making it clear the nexus between the theory and how that would play out in practice. So I think if we can take it forward on that basis, and then come back and have a look at it again when we've got that additional clarification and perhaps slightly more granular thinking then for the when we meet in at the end of September. That's okay.
Yeah, fine.
Okay, so then move us on to the final question then.
Thanks. And the last section and question is around the practical issues. I think probably the biggest concern were the complexity of the requirements in terms of the accounting and classification treatments. They were raised by a number of respondents. Some respondents considered that the requirements could be simplified and suggested a proportionate approach. A key concern was the capacity of staff, particularly in smaller MPOs, and the monitoring of the performance obligations, both as donor and recipient. We acknowledge the concerns about complexity and will consider whether any of this can be addressed by additional drafting or the guidance that we've talked about earlier. In response to the stakeholders' suggestions, we would note, though, that INPAG's not intended for the smallest of MPOs. And of course, with all these things, there's a risk that any simplifications could result in inappropriate use or incorrect accounting and not reflecting the economic substance of the grant transactions is a key concern. The full list of practical issues are in the annex, but another practical issue probably would highlight is the possibility of inconsistent accounting treatment between donor and recipient, different conclusions around classifications. Again, we acknowledge this, but would note that there's similar risks arise in the IFRS 15, IFRS SME's grant accounting contract with customers model, and is probably a feature of a lot of different transactions anyway, not just the revenue recognition, but all forms of recognition. Different transactions are not necessarily recognized both ways at the same side. This could be and will likely be mitigated by improved documentation and conversations with the grant giver and the grant maker. We would seek TAG's views on whether any of the issues resonate and whether they've got any advice on the practical issues.
Okay, thanks, Sarah. And I think that overriding thing about you can't legislate for what the way a transaction is interpreted by either both sides, that's just a fact of life, I think. Doesn't take away from the need to communicate as clearly as possible principles and then the intended application of those. Any additional comments from TAG members? Yeah, Catherine and then Freddie.
Yeah, I was just going to add around some of the complexities, the concerns about smaller organizations and this being overly complex. I mean, I think this is something we've been talking about with our board a lot, but if sometimes complexity is unavoided, if you have a complex arrangement, then there's only so much the accounting can do. Sometimes it's sort of necessary and complexity is warranted. And so and the paper talks about this, some of the papers talk about this, but I think it'll drive better practice if people are concerned about the complexity of some of these things, then they can consider that when they're entering into grant arrangements. But typically, smaller organizations aren't going to have a whole lot of different arrangements they have to analyze. Maybe there'll be one or two complex ones, but I wasn't overly persuaded by that.
Okay, thanks, Catherine. Freddie, to you.
Thanks, Ian. Yeah, I think similarly, judgment, we are writing principle-based standard or guidance, not checklist. So it's unavoidable. Similarly, it's an international guidance, and clearly from very big ones to not smallest ones. So it's quite broad church, and I think then it's clearly, for example, for national standard setters that may get inspired, like for example us, by and then can step down and be more targeted. And I think that's a good reminder that I think somewhere in the project plan or broader strategy there is a placeholder for differential reporting further down the track, possibly. So we can't address all of these. And I think that's where, first reading it, I wouldn't go to distinguish by nature of the balances, because it's not just revenue. We'll be going through fund accounting, financial instruments, and everything. So I expect this type of comments will come through a number of areas, and to give further simplification options, it will not make the actual guidance in its entirety more simpler, quite on contrary. So I agree.
Okay, thanks, Freddie. And I think, there is a differentiation between first-time implementation, where inevitably agreements will have to be reviewed, and is the guidance reasonably practical to operate on an ongoing basis? Mohammed? You're on mute.
Okay, thank you. In Annexure B, in Annexure B, there are some comments and the response from the Secretariat. In the last comment, I mentioned that some grants will not pass the enforceability test because the agreements are not enforceable by both parties. So I think in our definition, we mentioned that it need to be enforceable by both parties. But in the answer, we were saying that if it is the advance payment, then there is no need for enforceability from the recipient part. So I think this so sometimes it will be applicable, enforceable, even if it is not. If it is not, I mean, it will be restricted, but if it not even enforceable by both the parties. So instead of mentioning that it should be enforceable by both the parties, I think we might have to change it a little bit so that we can accommodate a situation like this where enforceability from one party will be, and also we are doing the accounting, I think, for the recipient here. So if the recipient part is not enforceable, but still it will be restricted because it is an advance payment. So how will we address this term?
Okay, thanks, Mohammed. I mean, I think that does come back to then the being very deliberate in the choice of implementation guidance questions and examples to try and get behind those issues. Yep, sorry.
Illustrative examples and things like that, right?
Yeah.
Yeah, okay. Thank you.
Okay, thank you. So I think just sort of before we move on, Jenny, you've obviously just arrived. I just wondered, essentially, the conclusions from the discussions are, not to essentially maintain the model, but to be clear about unit of account, which is clearly causing problems. And then we need to think carefully about the implementation guidance and examples. For example, if we look at the asset side of things, going back to the definition of the framework and being, trying to help people through the thinking. Were there any particular points you wanted to make in addition?
I don't think so. Thanks, Ian.
Okay. Good. Okay. Well, thanks everyone. I think that's been a very useful airing of the issues, and I think that gives us sort of ways forward. So then let us move on to the next discussion, which is on the structure of INPAG. And I think that's you, Karen.
Yeah, that's me. Thank you very much. So in this paper, we looked at the responses to the question that we put about in the preface, which was about the structure of INPAG. And we have also included in this paper other comments. So we provide respondents with the ability to comment on other aspects of the guidance that were not addressed by the SMCs. And so we have gathered those comments and included those in this paper as well. Perhaps if I just touch on that first, because obviously there is no agree disagree with those. They are a set of comments. Many of the comments do relate to the preface, which I'll come on to. But the other there are comments also that relate to other sections of INPAG. And so they'll get picked up as we consider the responses to each of those sections. But they are listed in full in the annex to the paper, so you can see the kinds of questions that are being raised to the extent that they're not picked up in this paper. So in terms of the question we asked about the structure of INPAG, there was very strong support for the structure, with 92% agreeing, 3% disagreeing, and 5% neither agreeing nor disagreeing. The main area of comment, and the comment does apply to those who agreed as well, were about ease of use of INPAG and issues around that, and the relationship with the IFRS for SMEs accounting standard and the benefits that come from that. And there are just a couple of points that I want to pick up, particularly around naming, just to make sure that we've had the final airing on that. It's something we've talked about before, but as it came up again, would just be to kind of check in on that. I should first of all apologise for the fact that I can't count, and therefore question number 6 is missing. So please do ignore that. I've missed that in my final review. But if we sort of turn to it kind of a section at a time and perhaps look at ease of use first. So in terms of ease of use, the comments there were around the volumes that we use in INPAG, and the questions were around potential complexity from having the different volumes that we have, and risks about lack of consistency between them. Those that were that commented thought that it would be better to consolidate guidance where possible to reduce the risk of inconsistency, but also to make it easier for people to navigate the guidance. So there were suggestions that the application guidance should be merged into core guidance. And there was also a suggestion that implementation guidance should also be brought into core guidance, certainly by at least one individual. I think everyone was clear that the basis for conclusions should be separate, but it was really around how we brought the guidance together. The Secretariat's view on this is that given the principles that we were following, I think that we should look to bring application guidance either into the core guidance if it's authoritative, or into the implementation guidance if it's not. And to only retain separate application guidance where that already exists in the IFRS for SMEs accounting standard, where we've created additional application guidance because we have not reviewed a section, for example, section 12 on fair value measurement. And if a section is particularly long, and this idea that you separate the principles from further explanation about how you use those principles, that might very well be the case in section 23 on revenue, which we know is quite a long section. So the Secretariat is minded to look at consolidation to try and improve that aspect of ease of use. However, on the implementation guidance, Secretariat's view is that should be retained as a separate document to not confuse authoritative guidance with non-authoritative guidance, and so we should keep that delineation there. So I think those were the main points arising from ease of use, and there are some questions in the paper relating to that about the use of application guidance the positioning of implementation guidance, and whether the tag has got views on other aspects of the structure that have been brought out from the feedback.
Okay. Thanks, Karen. So, noting that making implementation guidance authoritative might have a due process issue attached to that as well, given that we've not exposed it as authoritative. Open up for comments from members. So, Catherine, to you first, and then to Jenny.
I strongly support combining the authoritative text into one document. I have a lot of sympathy for people who say it's quite confusing to have to flip between the two documents. I think that poses a big risk that people aren't going to apply the full set of guidance. And I know some of the concerns were around the length. I actually think you could have it'll overall be shorter if you merge the two, because I think sometimes in the authoritative text, or sorry, the application guidance, you end up repeating some of the context from the core text in order to sort of provide that context. So I think you actually would have less words overall if you merge that. And I'm not overly concerned about sort of the length of a single document. I think it's more important to have it all in one place. So I like the idea of sort of the authoritative and the non-authoritative in two separate sections.
Okay, thanks, Catherine. Jenny.
Yes, thanks, Ian. Yes, I also would support bringing that authoritative guidance into the main text. I think that should be easier for people to use. Just one thought, though. I think, Karen, you talked about perhaps maintaining separate. So I agree in the situations where you were saying INPAG hasn't looked at a particular section, then to have the guidance separate, that does make sense, because it's not, it's sort of identifying the bit that's been reviewed, isn't it? But I'm not sure that I'm totally convinced about separating guidance only because a section is long. And I think in those cases, if you were to separate something, for me, it would be more about things that were used infrequently. So it needed to be there, obviously, but it wasn't going to be applicable to most entities. And so that might be a reason to put it into an appendix. Thanks.
Okay, thanks, Jenny. Freddie, to you.
I actually wanted to ask a question, because then separating or not separating, when I was looking at the ED, I think it was ED1, but maybe I was looking now, but I think it was in all EDs. We had G paragraphs and then AG paragraphs, but they were all in the same document, right? So wasn't sure whether the feedback was to combine G and AG sections into one. And in that case, well, personally, I don't distinguish much between G and AG. I always go into both, right? It's what just Jenny pointed out or asked about the point you, Karen, made about if Smith separates G and AGs, we do suggest that we will keep them the same, but then we will separate for the sections where we develop to have just one G section if you want. And I think that's where I would just personally would prefer to have all sections in INPAG consistent, assuming that both AG and AG are in the same document. And then if it makes sense to have principles or bold text and then application guidance being clearly mandatory, whether it's separated or not into two sections but following each other, I don't mind to combine them, but then my preference would be to have it then consistent across the document, because sometimes the length of application guidance or of the all section actually indicates that section is important for readers. And I agree with Jenny that to distinguish the approach according the length of the section, again, I would not go down that route personally, because again, there is probably a reason why the section is long. So not sure where this will leave me. So I think I probably aligned what Secretariat suggested. I just wanted to outline how I was thinking, and I agree that non-mandatory guidance, in my mind, simple mind, illustrative examples that can be or should be in a separate document.
Okay, thanks, Freddie. So what I'll do is I'll just carry on taking sort of initial reactions from tag members. So go to Ihanye and Daniel before going back to you, Karen. So Ihanye, to you next.
Yeah, thanks. I align with Frederick. I'm a little bit confused about merging the guidance, the application guidance. Is it taking the application guidance as proposed to the standards, or are we picking out some elements of the application guidance and putting in standards? So I'm a little bit confused about that. Then, of course, IG stands alone as a separate document. I don't have problem with that. Remember, we are gearing towards having clarity and understandability. So if we combine the application guidance with the standards, I think it will be a little bit lengthy and cause a lot of quite apathy. So I will recommend we try to select. Please pardon the noise. I'm at the airport, so you'll get announcement. I'm so sorry about that. I'm traveling. So my conclusion is, let's try to restructure the application guidance and take few points and include in the standard. That would be my take. Thank you.
Okay, thanks, Ihanye, and thanks for bearing with us in terms of trying to input while at the airport. We appreciate the practical issues. Daniel, to you.
Thank you. My question is some about also meaning and terminology. What will be the difference between non-authoritative guidance and educational material? We are thinking of that because if it is, it's a separate document. Okay. Mm-hmm. If it's not, it would be included. So the other point is about authoritative guidance. Of course, is an amplification of the concept's content in the first paragraphs. So it would be included like a separate section, but in the core text, because otherwise it would be confusing for users. But I think we have to think better about the meaning of the documents we are preparing, and especially to focus on what is the purpose of each of them.
Thanks, Daniel. So I think, not hearing any support for bringing the non-authoritative material into the authoritative text. Certainly, I think, I'm hearing general support for bringing application guidance in terms of conciseness and focus. But I think what I'm also hearing is concerns in terms of we need to be clear about the kind of approach that we're taking, and if you like, the principles, so that people know where guidance is located, and I think that consistency of approach. Karen, back to you.
Thanks, Ian. I think that's been some really helpful feedback on what we're proposing there. Particularly useful about where we've got longer sections and that members are not concerned that if we do bring all of the authoritative guidance together in one place, that is not a concern. also take sort of Daniel's point about amplification, and the point about only when things are not frequently used, perhaps to take them out. So we'll certainly think that through in terms of approach. And it might be more of a practical thing as we look at each section. I mean, we've certainly feel like piloted it in the section on narrative reporting, where there is no AG in that any longer. It's all been merged into either the core guidance or into the implementation guidance. So we'll take a look at how we've used AG. But I note the point about consistency, but I do think that where we've created AG on sections that we haven't reviewed, that it is useful to label that separately, so that we don't create an impression that we've reviewed a section when we haven't done that. So keeping it a separate application guidance to look at how to apply in an NPO context, I think is useful still to do, but we'll bear in mind the feedback that we've received as we think about the other sections and some of the principles that you've outlined in that. To Daniel's question about IG and educational material, the IG, we are focusing on trying to use examples to explain the principles that are in the guidance, or about factors to consider when an NPO is making a judgment. So the examples will be probably simple and limited because we're looking to illustrate the application of a particular principle, whereas I'd expect the educational materials to be perhaps broader in nature, in joining up particular aspects of the guidance to bring perhaps a more collective story. But I think we do need to illustrate the application of particular principles, and that's what we want to use the IG for.
Okay, thanks, Karen. And I think, I think in terms of that clarity about how we've used application guidance, that's probably a useful benchmark in terms of those sections that are essentially we've aligned with IFRS for SMEs and clarifying the use of AG there. And I think perhaps if you can, moving forward through the other sections, just when we get to the next section where you're proposing, merging in AG, just to be clear, help us with that overall narrative, and we probably need to be able to articulate that for users anyway somewhere in the document. Just how we've approached it.
Yeah.
Okay, shall we move on then to the next questions?
Yeah, so the next sort of topic area in this paper is around similarity with the IFRS for SMEs accounting standard. So a number of respondents commented positively about following the same sort of structure as the IFRS for SMEs accounting standard, and thought it was useful to be able to cross-refer to what was in the IFRS for SMEs accounting standard. As the Secretariat, I think we've long sort of viewed about where do we want to go with this, because while some users will be familiar with the IFRS for SMEs accounting standard, we know from the initial work that we did that isn't going to be universally true. There will be some people who have not used that standard before and will not be familiar with the section format and structure. And there is also the point in terms of making clear that this is a document that's been created for non-profit organisations. And by having a structure that works for non-profit organisations, we cement that view that it's a product for non-profit organisations, and therefore we structure it for the benefit of those entities. So with that in mind, we have been looking at two options at the moment. One is about providing a navigation map if we were to keep the existing section structure as per the IFRS for SMEs accounting standard. that would kind of group the sections together, or show which sections relate to particular topic areas. So that might mean that we can then pick out things that are more relevant to NPOs and group them together so that they can be identified readily. And we've created a navigation table in Annex B to the paper. And this table is been inspired by work that IBSASB have been doing to looking at the grouping of its literature. So it's very similar, but it's not quite the same as that. So that's one option that we could do. The other one is a complete renumbering of the sections. Again, using this kind of structure in Annex B to look at the ordering of the topics, but to effectively bring forward those topics that we think will be more relevant to NPOs to the beginning of the document and make it have a look and feel that's a bit more tailored to non-profit organisations. So we're seeking feedback on both the grouping of sections. Does the way that we group them make sense or not? Acknowledging that there are many ways in which you could do this. And then the second question is about I think the Secretariat's preferred view that we look to renumber the document to better meet the needs of NPOs. And I should say in doing that, when we discussed this with the PAG a couple of weeks ago, I think there was a strong support for renumbering it, on the basis that this is a product for NPOs and therefore it should reflect the topics that are most important to them.
Thanks, Karen. So open for comments then from TAG members. Yep, Catherine, to you first, and then Freddie.
I agree with the renumbering. I think it makes a lot of sense to organize it in a way that's more meaningful for the people who will be using it. A minor comment on the listing, I found it a bit odd that the related party disclosures was kind of stuck in the middle. I would probably move it down to the bottom. And just on the renumbering, I know obviously for people who are familiar with IFRS for SMEs, we're trying to kind of maintain that link. I think we could still have a table of concordance or something like that, of course. And I actually don't think it's necessarily a bad thing to kind of distinguish our standards from IFRS for SMEs. I think there's a risk that if someone is familiar with IFRS for SMEs, they could assume they know what INPAG's going to say without looking at the standard. So I actually think it's kind of helpful for them to even that sort of renumbered trigger for them to think about whether there's something different in there than IFRS for SMEs. So fully support the renumbering and reordering.
Okay. Thanks, Catherine. Freddie, to you, and then to Jenny.
Thank you. So I'm not going to repeat comments from Catherine because I agreed with all of them. The only one additional comment I had or thought was, and I'm taking this to extreme, but in some cases, for example, when we refer to non-financial liabilities, for example, income tax, it can be a income tax asset. And I don't know whether there's a higher risk that someone will go just buy the high level, and similarly to borrowing costs that may not result in non-financial assets, but actually in expenses. But that's a very extreme comment, so I will just make it for completeness. Thanks.
Okay, thanks, Freddie. Jenny?
Thanks, Ian. I do have some different thoughts on this one. I suppose I was thinking that because we've used the IFRS for SMEs as the foundational framework, and in some cases we haven't actually updated the text, that moving things around perhaps gives the impression that more has been done to those sections than actually has, where if we've maintained the structure. And I guess to me, another way of dealing with some of the concerns that some of the important things might be at the back because we've sort of added them on numerically, is one of the things we have done in the UK with FRS 102 is that if there was something that needed inserting in a different place, we've just called it, section 1A and put it in between 1 and 2 rather than necessarily having to add it on at the back. So there are other ways of putting things in a more sort of the place where you might expect them to be. A couple of other thoughts. I was a bit concerned about having the supplementary statements in the main part of the guidance, given that that is about information that, if I'm understanding it correctly, wouldn't be in the actual annual report and accounts. So I think that should be at the end under any structure. And a sort of detailed observation, as Catherine and Freddie had, I wouldn't put section 10 on accounting policies at the bottom, because whilst it does deal with prior year adjustments and restatements, it also deals with setting policies more generally, which is more fundamental and should be further up in the hierarchy. Thanks.
Okay, thanks, Jenny. Jeff G.
Yeah, I was thinking about this too. I was thinking I think I'm echoing Jenny's concerns, but I think it could get very confusing after a while if, paragraph, especially we're not allowed to renumber paragraphs or repurpose paragraphs in the US. If we have to insert a paragraph, we have to do 12A, 12B. And I like the idea of kind of inserting that, because then if you're referring to, maybe just from a technical accountant's perspective, but, if you have paragraph chapter 12 in IFRS for SMEs is about this, and then chapter 12 in INPAG is about something different. You start referring back and forth to different paragraphs that are completely different. It could get very confusing very fast, and having to go to tables to figure out where am I. I think it could lead to a lot of confusion. I like the idea of inserting maybe like a chapter 23A or 12A or whatever.
Okay, thanks, Jeff. Daniel, next.
I think in my point of view, when we are talking about an international standard, it's not very important to keep a logical order in the sections, because it's very difficult to keep that order. If you see IFRS, for example, there's the numbering of the standards. It's only chronological, no more. You see, it's not about the subject. So I think if we remember the sections of the guidance, maybe would be more confusing for users, because I know, even though so much accountants maybe are not familiar with IFRS for SMEs, even though it's a reference standard for us. So it would be confusing, even though we could have a reference table. I think anyways it's confusing to use different numbering of and ordering differently the sections. So I would prefer to keep the relationship between sections and the guidance with the national standard.
Okay, thanks, Daniel. So Karen, views on both sides.
Absolutely. And we have set up some focus groups as part of the next stage of finalizing the proposals. And I think maybe between now and when we next discuss this in September, we'll look to take this to a focus group and seek other feedback. I'd be particularly interested to get feedback from those who are users of the IFRS for SMEs accounting standard. I think there's a question in my mind about how important that is, in that INPAG is the reference document, not IFRS for SMEs. And so, there may be a bit of initial look back, but actually, people will start to look at INPAG for what it is as the source of guidance. And I think, to the point that was made earlier, there may be benefit in that, because there are then no assumptions about what the requirements are, which people might do if they thought it was the same as IFRS for SMEs. So I think there are a number of different factors to consider there, and we'll take that away and we'll discuss that a little bit further before coming to a conclusion around that. We would certainly include a reference table in the document, so that anybody who did want to see what the equivalent section is would be able to find that. And I do take the point that it's you might create an order that works on the day that you issue it, and then something new comes up, and it goes to the end, or in some other format. So I completely note that, but I think it's just a question about how do the fundamental question for me is, how do we make this look and feel different? Or do we need to make it look and feel different to existing guidance, so that users of INPAG feel that this is guidance for them specifically? And really helpful comments about the clustering of the topics.
Okay, so I think you've given us the way forward there, Karen. So I think ultimately it's what is going to work best for users of the guidance. So I think we need to hear from them whether the current order is a big issue for them or not. Probably if it's not, then it may be on balance that maybe we should keep the linkages with IFRS for SMEs, but I think we just need to hear what they have to say, and then bring the proposal back for a decision in September, because we will need to make a decision at that point, so that you can move forward with finalisation.
Yeah, thank you. Yes, no, we'll do that.
Okay. So move us on then to the question 7/6.
6, yes. Apologies for my numbering. So I think just one point to pull out from the paper that there isn't a question about, but a point to note is that both in the response to the preface and in the other comments, there were comments about, is this guidance or is this a standalone standard? So that is something that we are looking at, but certainly it has been written as a standalone standard, and that's very much, I think, where we are thinking about how we badge it, so that it's clear enough for people exactly what it is. The paper then talks about naming conventions, and this is a topic that we talked to the PAG about as well. It's an area that has a lot of conversation around it, a lot of discourse around both expressing something in the negative, where we use the term non-profit, so we're talking about what it isn't rather than what it is. And there is a number of people who have put forward the point that we should be talking about for purpose organisations rather than anything else. We did talk to the PAG about this. And Tim might want to jump in, but I think their view was there is a lot of conversation about this. It is quite sensitive and kind of open to kind of political positioning in terms of where it goes. The PAG were on balance of the view that we should stick with non-profit. And in fact, in some places, they said we've been working very hard to get people used to the term non-profit and getting them to understand it, and changing to something else at this point would be very challenging. The Secretariat's view is that we should stick with where we are based on that. But I just kind of wanted to give it one final airing because it does come up in conversation. It is quite topical and was mentioned in the feedback that we got to the exposure draft.
Thanks, Karen. So anybody wanting to make a change then? Catherine?
No, no, not suggesting we make a change. I agree with nonprofit. I think all the other alternatives that have suggested aren't quite broad enough for the nature of this like philanthropic still doesn't fit when we're talking about membership organizations and things like that. So I think I appreciate it's not the best, but there's no better alternative in my mind.
Okay, thanks. I see Fred is very much in favour of maintaining non-profit. Jeff M.
This is really a question, I think, for Tim. There's a mention here in the paper that a preference for not-for-profit rather than nonprofit was expressed in the meeting. Was that one or two PAG members, or was that more widespread?
Tim, to you on that?
One or two, I seem to remember. I didn't count them off exactly. But,
Okay, probably because it's less of a mouthful to just stick with nonprofit.
Yeah, and the main one was that, because it's been associated with our branding as well. We have been using nonprofits, so don't change something that we've now built up some level of recognition around.
I mean, it does. I think it does. We need to make sure that we've explained the term appropriately in the basis for conclusions. The other point I think that's relevant is, I mean, Tim, I remember when we sort of kicked the project off 5 years ago. Certainly, that non-profit term was very much the one that Humentum were using within the community, and I think that's the reason why we went for non-profit rather than not-for-profit at that stage. So it does seem that we should maintain this now, but make sure we explain it. Okay. Any other comments then? Which is the final question on this paper structure? Okay, so I think then we break at that point for 10 minutes. So just to brief one. Okay, so thanks for coming back promptly. So we move on now to the paper on narrative reporting, which is, of course, one of the key areas in the guidance. Sarah, you've picked this one up. So over to you then in terms of the proposed way forward.
Thank you, Ian. And this is the next position on well, this is bringing together all the information we've had so far to develop the final guidance, with the exception of probably sensitive information, which I'll go into discuss in a bit, because we think we need to test that a little more. It takes on board TAG's advice, some of the more detailed comments, the focus group, which we didn't get, timing didn't quite allow us to fit in last time, and the actions set out in the paper, the first paper in May. So it's follow up from the May meeting. There are two issues that we've looked at in terms of drafting changes. There's a reference throughout, or there was in ED1 for performance information and financial commentary instead of narrative information. And considering where application guidance is best placed, which I'll talk about in more detail, following the discussion that we had with Karen's report just before the break. So the annexes then, so apologies if the paper's long, but that does mean it includes section 35, its implementation guidance, all the track changes, removal of the application guidance, and it also includes in Annex C the basis for conclusions as amended for all the changes we're proposing to date. Clearly, the basic conclusions might need to change if there are further changes suggested today. So that's an introduction. In terms of the first section for the first question, the approach to both the principles and the scope was generally agreed by TAG at its last meeting, and particularly the agreement not to include differential reporting in section 35. But there are some more minor suggestions that have been implemented now, emphasising that narrative information must be reported separately from the financial statements and their notes. So edits have been made to paragraph G35.1 and G35.26. Additional guidance about longer-term financial reporting and performance. And we've also addressed the sustainability reporting issues where TAG's advice at its last meeting was that INPAG should not discourage MPOs from including reporting on climate issues in the narrative report, and that it should be but that it should signpost current developments in both national and international guidance. So that's at G35.44. So I would welcome TAG's members on the proposed new paragraphs that we've talked about. So IG35.29, IG35.44, and the changes to the core guidance at 35.1.
Okay, thanks, Sarah. So open for comments. Yeah, Catherine.
This is a bit of a general comment that applies to, as I was reading through all the revised narrative reporting. I don't necessarily have concerns about the sustainability piece, but it's the way that it's framed in the context of what users need. And the reason I say this, and I can't remember the exact wording, but it's sort of like, if you think users would like this information, you should, we're suggesting you should provide it. And I've in talking to users in all my years of standard setting, I've never heard a user say, I don't want that information. And so I think we just need to be careful to not frame it in a way that it's like, obviously we always have our user needs hats on when we're setting standards, but throughout the document, there's sort of this discussion, give the information to the users to enable them to do this. And I think we need to kind of cut that reference to users out, where it's the requirement is that the entity needs to disclose this, not that the user needs is kind of in the background and would be something discussed in the basis, but in the core text, I wouldn't typically expect to see that sort of language. And I think it can be problematic in certain instances, as I said, where we say, if the users would find this helpful, we should provide it, because I think there's going to be users out there who argue it is always helpful, and that puts entities in a tricky situation where we're essentially mandating this because the users would tell them that they want it. So it might be that there's, particularly in the sustainability piece, we kind of make that comment a few times. I think we need to think about how we reframe it as useful information, but not so linked to when sort of the users, but also kind of maybe do a search of the whole document and where we're referencing what would be helpful for users, just to consider whether we actually need that type of language, or do we just state a requirement to say, this is what you need to disclose.
Thanks, Catherine. I think that's a useful steer. And certainly I think sometimes you also see a slight confusion between users and primary users. And we probably need to be very clear that it's primary users, if there are references there. Catherine, you want to come back on that, or all right? Okay. So Freddie, to you next.
Thanks, Ian. I think on the back of that, do you think we want to go through and check, for example, the use of the word should and shall in different places? Because I think sometimes we don't want to impose requirements, but we may use slightly different wording. One thing that I think it was in the paragraph IG 3544 around the sustainability and ESG matters. Not sure whether we have acknowledged or whether we need acknowledge that there will be some not-for-profits that actually their primary objective or objectives are ESG related. And in that case, it will be actually probably included in their service performance information because of the nature of their objectives as opposed to ESG related matters. And I think the challenge, and as we are now looking in our service performance reporting in from project here in Australia, personally, I do see service performance reporting and if you want management commentary, OFR, and sustainability reporting. And I think I probably discussed it as a Venn diagram. So as we are talking about all three of them in one section, it becomes challenging, especially if we want to. I'm not sure whether the word mandate is the right, but I think if you want to make mandatory service performance reporting and say management commentary, but not necessarily sustainability reporting, that's where I think the challenge is, because we are trying to draw the hard lines between a few things that are maybe a little bit overlapping in some cases, at least. Thanks.
Thanks, Freddie. And that may be that we need to, we need to have an overarching statement on what is required and what is permitted in that according to that typology. Okay. Any other comments before we move on? Okay, move us on then, Sarah.
Yeah, thanks, Ian. The next section is other issues, and we members might remember that the last meeting we had a discussion about reporting with free reserves and efficiency ratios. With regard to reserves, it was agreed or advised that this was a financial reporting issue, and we think that it should be addressed in ED3. And there are suggestions to whether, or following the results of ED3. And there's also some guidance in a new paragraph on funds already, which talks about reporting of financial sustainability, which should pick up that. Which that is addressed in part and already in IG 35.7, which was already considered last time. And additional sentences have also been included because it's such there's consistent comments on efficiency ratios. So we haven't included a lot in there, but we have added an additional sentence on performance issues and efficiency ratios in IG 35.26. So that's the second sentence there. There's also an issue of the approach to guidance where the over-exemplification of issues can lead to rules-based approach, and we agreed with TAG's advice on there. And so we have included signposts to good practice, which would be included on the INPAG website, which is at the last implementation guidance paragraph. So there has been some additional guidance, but bearing in mind that we're concerned about boilerplate approaches, we've not overloaded it with guidance on free reserves and efficiency ratios. So our TAG members content with the Secretariat's proposed responses to its advice about reporting performance, including the use of efficiency ratios and reporting on general reserves. I will pick it up after ED3 generally, but there's some guidance already in there.
Okay. Comments? Okay. Just one comment from me. I think we just need to take this offline in terms of, I think there is a problem about referring out from our guidance into, non-authoritative guidance on a website. And I think we just need to work out what we do with that, because I don't think it works as it's currently drafted.
Okay.
So I think that's just something that we, appreciate the intent, but I think we need to be careful about that. Catherine?
Yeah, I had the same reaction to that. It's not something I've seen before. It might be something that better works in like the basis as opposed to if we want to sort of provide that context and that reference, that might be a better place for it.
Yeah, thanks.
I'm with you, Ian. There's a whole host of problems of sort of, especially when you have printed materials that are, it's complicated.
Okay, thanks for that suggestion. So I think we take that one away. But that may well be a good way through.
Yeah, absolutely.
Okay. So then the next question.
So at the last meeting, it suggested additional guidance be added to address circumstances where there would be conflicts with jurisdictional, can't say that word, prescriptions. So a new paragraph has been added to G35.4 to indicate where possible reporting requirements should be combined with INPAG requirements. But exceptionally, if there's a conflict, jurisdictional requirements will take precedence. And where this is the case and INPAG requirements haven't been able to be adhered to, this should be reported in the narrative report. So do TAG members agree with that approach? It's a little different from the ED.
Catherine.
I don't disagree, but just a comment on the drafting of that paragraph, the use of the word similar force, that just didn't seem like quite standard speak to me. I think authority is probably the word that we're looking at, or something along those lines.
No, thank you.
Okay, thanks, Catherine. Freddie.
So I had a question then. Well, if there is a conflict in a legislation and therefore they didn't follow parts of the section, does it mean that they cannot then can claim compliance with INPAG? Because one thing is that they will make a disclosure which sections they haven't or requirements are in conflict and therefore they didn't apply them. But then it might probably impact the overarching compliance statement. And I was thinking more actually even broadly from whole of INPAG, not just the narrative reporting, but this discussion on narrative reporting. So not sure whether it will leave us that because maybe I don't know how do we mean conflict and goes back to the similar force, whether we should not dilute INPAG before we even start.
Good point. Sarah, Karen, I don't know whether you want to respond on that now or whether you want to give that some further thought.
My initial thought was that that's why we've got it in there. It permits that conflict, but yes, there is a point of dilution that might happen there. But I'm not quite, and the exception would be, I think maybe looking at it now, maybe it's not complex. It would not permit you to do that report, so you've not got a choice anyway. So it allows that to take place. But yeah, I think we still need to discuss it perhaps a bit more.
Jeff M.
I was just kind of, for those of you on the call who may remember these things or know these things, what's happened with IFRS when there've been carve-outs and in an audit opinion? Anybody know? Because that's sort of an analogous situation here.
Yeah.
They were permitted.
But again, was there mention in the audit report about those types of differences?
Sarah?
Oh, I know they were permitted, and they were allowed under the various regimes. For example, I think in UK, and perhaps Jenny might have remember more than me. They were allowed to follow IFRS, but it was as adopted in the UK, so that then it would have that particular commentary. So maybe that's where we've got to go.
Yeah.
If I remember correctly, I think in the EU there is still carve out for hedge accounting, and I do think that's one of the reasons why they refer to IFRS as adopted in or by the EU if it didn't change 15 years since I left there. Yeah.
I think it's something we need to go away and think about. I mean, I think the dilution point is really important. I mean, every jurisdiction that chooses to adopt INPAG can look at how they implement it, and maybe that is the appropriate point at which to address any potential conflicts rather than doing it in the guidance. And maybe in the basis for conclusions, we can explain that we thought about this, but decided that it was for a jurisdiction to make that determination. So I think we'll go away and have a think about that and perhaps look at how it applies with other international standards at the moment, so that we've got consistency of approach, I think, as much as anything else.
Yeah, okay. Thanks for that. Mohammed?
Yes, as far as IFRS is concerned, when we are in meeting with the IFRS Foundation in UK, they said that if you want to mention in your financial statement, compliance statement, that this set of financial statements are prepared in accordance with IFRS, you have to follow the total IFRS, all IFRS, without any exception, without any deviation. Unless there is allowed departure, which is in IS1, there are some situations where the departure is allowed. Otherwise, they said that this is a brand. If you want to use it, you have to use it totally, and then you can mention the IFRS. Otherwise, you should not refer to IFRS, and auditor should not mention it in the audit opinion also. Strictly, they forbid it for us. So that is what I have the information. Thank you.
Okay, thanks for that. That's helpful. Okay, so I think some further thought required on that, but I think you know, taking it forward as a framework issue seems to be what we need to do rather than actually specific drafting here.
Yeah, that's fine. That's useful. So there were numerous comments on presentation, which suggested, and we suggested a number of ways that we'd address this. And the issues on presentation were about balance of reporting, connectivity, and overly long reports. So this is also addressed in the Annex D. So we've included commentary to encourage more balanced reporting in the core text at G35.7. The reporting objectives of each of topics and the interrelationship between them have been added to encourage balance of information. And the connectivity between the topics has been included as well. And that's a new diagram and guidance at IG 35.4. And then the benefits of setting out links with other reported information is also being included to address issues of connectivity. We also suggested at the last meeting that we would include guidance on governance issues, sets out how the disclosures might include information on decisions made, including the structure of the arrangements, contains some suggestions on the types of governance arrangements which should be considered. But we are we are particularly interested in considering whether that is set at the right level with the mandatory requirements, and that's included at IG 21. So there are 3 questions for those issues on presentation and governance. Are TAG members content with the new core guidance and implementation guidance? Do TAG members have any comments on the proposed responses to the last meeting? So there's a number of changes made at the last meeting as well. And do TAG members consider additional implementation guidance and governance is useful?
Okay, thanks, Sarah. So I open up for comments on those 3 questions. Freddie, to you. And then
I think it's that maybe that this use the words might or may, especially in IG 35.29, where we say may consider also the broader longer term effects on other organizations. And I think that broader, longer term, and word may, and in this case, it doesn't make reference to the users, but it's not clear when and how. And we are now discussing, obviously, in Australia, working through the climate-related financial disclosures and Scope 3, and our board had a discussion on service performance reporting, whether service performance reporting reflects also the performance of entities other than the entity. And I think it goes back to the boundary. And I think the clearer wording would be better because not sure whether it's helpful to leave it as that. If we don't put further guidance, what are the instances where that broader, longer term effects should be reported, and maybe what are the examples of instances where it should not be reported? I'm not sure whether it's there. Because this is difficult, I guess, area of broader or longer term. It's the question, how long is the piece of string?
Thanks, Freddie. Catherine?
Yeah, my comment is regarding some of the changes made around sort of clear and concise language and sort of that getting at the sort of a fair and balanced report. I just felt like I mean, in my view, that's really what the concepts are trying to get at. And so it feels a little bit redundant when we've kind of I think what we're trying to do is put in a bit more plain language, but I think we've made it a bit redundant in doing that. I would consider whether that needs to be in the core text, or perhaps some of that sort of plainer language is something that better sits in implementation guidance or something like that. It felt reading through it kind of felt quite redundant, where you have the paragraph on concepts and then this paragraph that immediately, I guess, preceding that says it should be fair and balanced. Well, that's what the concepts are really getting at. So just looking at whether it's a bit redundant in a few places, and maybe there's a better place for some of that plainer language guidance.
Yeah, thanks, Catherine. I think, this is always the challenge in finalising guidance, because constituents always want more explanation, more examples, and then, as you say, you can build in redundancy. You can also end up with unintentional conflicts. So I think we have to be very careful what we add to the core text, the authoritative text, as opposed to IGs and really whether, what we do. So yeah, if you can take that one away, Sarah, that would be helpful.
Yeah. Interestingly, we moved it about a bit, so it was our debate as well. So happy to have that feedback too.
Yeah.
Consider that.
Okay.
So non-mandatory information. This probably is where we put a lot more emphasis on the users, and where Catherine had problems. So I would need to revisit that then, following those comments from Catherine, and thank you for that.
Yeah.
But we've looked at that and I guess this is the issue. We looked at that in the adding guidance, and this was already considered at the last meeting. But a tag member cautioned against encouraging NPOs seeking too many opportunities to use other frameworks or approaches to the reporting of non-mandatory information, which the Secretariat concurs. So that's where we used a lot more useful words, use and useful. So we may need to revisit that. But new guidance has been added in paragraphs G35.40 and G35.44 to try and not get everyone soliciting all forms of mandatory information as well. And it's the guidance that we introduced at the last meeting. That was originally application guidance, and we moved it to G35.40 and G35.44. So we'd welcome any views on the comments on additional guidance, or non-mandatory guidance, sorry.
Okay. Catherine.
Non-mandatory information. I'll get it right in a second. Sorry, I'm reading too many things on screen at the moment.
Catherine, to you.
Yeah, I mean, and Sarah, you sort of already picked up on it. I think this is one of those places where we've kind of have that language that I was concerned with. I think reframing it into sort of what in the judgment of the organization is important to say, instead of suggesting that we need to either, provide what users demand or somehow read their minds in terms of what's useful for them. So it's flipping it so it's the judgment of the organization might be helpful, particularly in this instance.
Yeah, thanks, Catherine. If you've got a suggestion on wording, that would be helpful. Okay. So let's move on then to question 8. Oh, sorry. Oh no. Okay. Yeah.
Okay.
Yep.
So looking at sensitive information, this is an area where we've done some substantial redrafting, particularly on the implementation guidance, and looked at the focus group feedback again with more detailed information. The approach to sensitive information core guidance remains largely the same as was reported at TAG's last meeting, although it's been augmented. Paragraphs have been split to improve readability, and the implementation guidance it was also added back into this, and maybe it might not be as the last paragraph in G35.12 as to when sensitive information should not be used. So largely it's the same, but we've structured that slightly better. Last tag meeting talked about looking at providing more guidance, and we thought not to add more guidance in the core guidance, but in implementation guidance. And thanks to tag members providing the ACNC guidance and the ISB Foundation paper, which has been using Karen's very useful term, inspire some of the guidance that we've written here on new examples are from the focus group, but those two sets of guidance from ACNC and from the ISB Foundation paper, we used to establish parameters for decisions on when and whether to use the exemption and provide guidance on what to report if the exemption is used, because these were areas that stakeholders were concerned about. That being said, one PAG member was particularly concerned about putting anything additional on sensitive information, and that it should actually not be reported. And so we're going to have case studies to just test whether this has worked, but we would of course welcome your feedback first on improving this before we do that, and whether we've hit the right positioning for this guidance.
Thanks, Sarah. Comments? Okay, not seeing any flags raised. I think my sense is I think we need to be very careful about the length of the material we add, because there's a risk of moving into rules here. So we might just want to pare back some of the drafting. Catherine.
Yeah, I'll send comments offline. I did have some thoughts around some redundancies in the new drafting, so I can send those offline. I don't need to provide them here.
Okay, that's helpful, Catherine, and I'll send through my comments as well on that.
Thank you, Ian.
Okay, so then moves on to the final question then.
And the final question is we use the phrase performance information and financial statement commentary quite extensively in developing this. It was used throughout section 35 and in the implementation guidance, even though some of the requirements apply to all narrative information. So there's a risk by using that phrase that it means that we miss requirements out for some of the topics. So that's been removed in the editing. And the second area, which was mentioned by Karen in her earlier report, is bringing together or finding the right place for the relevant bits of the application guidance. And Catherine is right. We moved some duplications by moving out some of the relevant bits, some of the bits that were redundant by putting things in core guidance. We moved stuff to core guidance, and we also moved paragraphs to implementation guidance into the relevant sections. The first, apologies, I should have numbered Appendix E 1 and 2, but the first Appendix E sets out where everything has been moved to help tag members to understand that. And the second Appendix E then looks at drafting augmentations for some of the terminology used, and to actually align things better. But and we've done some of the shoulds and shalls. We can check to make sure we've done more of them. We can do a search and make sure that with each one is appropriately a should or a shall. So welcome views on the changes to the application guidance, the removal of the phrase, and just the general drafting augmentations we've picked up on our way through.
Okay. And obviously, as ever, drafting comments offline. Any points of principle anybody wants to raise? Okay, not seeing any hands raised. So I think, obviously, number of drafting issues then to finalize.
And then just finally, then there's the basis of conclusions in. We haven't got a question on it, but I thought I'd just mention that we've got the basis of conclusions. We've updated that for the consultation. Of course, it would need to be updated following the comments here. But they're generally, is the approach right and the level of detail in the basis of conclusions, or is there anything else I think we should add to that?
Any concerns on that? Okay, good. Right. Thank you, Sarah. I think, moving well towards conclusion on this, but a number of sort of drafting issues to pick up on as we move.
Absolutely. Thank you.
Okay. So thanks. So then we move on to the final paper on financial statements way forward. And I think, Karen, that's you.
It is back to me to deal with this mammoth paper that we have here. On the financial statements, this paper really is setting out a summary of the feedback that we got as part of ED1 and how we are proposing to address any of the key issues that came out from this. I should say that whilst we are looking at this now, it really is in terms of framing the way forward. In ED3, we have got the illustrative financial statements, and so there is possibility that we'll get feedback on that. So we aren't intending to finalise the drafting of any of these sections until we have had feedback on that. But this is really useful in terms of thinking through the drafting of the other sections, which is why we're bringing it to you now. So there are quite a lot of sections that cover financial statements. So please bear with me as we go through them. So the first of them is section 3, which is on the financial statements generally. The first question that was asked was about proposed changes to terminology that were in the financial statements. And we had 78% supported the changes. There were those that disagreed were concerned about whether the changes were, some of the terminology was mandatory, particularly when it came to the statement of income and expenses. But section 3 specifically permits the use of different names for financial statements as long as that is not misleading. So we think that that is addressed. Also, in the responses here, that there were concerns about the use of the term equity, which we think we've addressed in ED3. And the final point on this question was about the need to replace entity with MPO. So some people liked it, but there were some respondents who felt that that wasn't necessary to actually make that change. So that was the first question. The second question was about comparatives. And again, we addressed this in ED3 because the key point in this was about the use of comparatives on the statement of income and expenses, where we had originally proposed that statement showed funds with restrictions, funds without restrictions, and a total. And so there were concerns that when you added comparatives, that would make the statement quite complex. We've addressed that now by removing that requirement in ED3 to present all of those columns on the face of the statement. So other than that, 90% supported it. There were people, as we've discussed before, who supported a comparison with budget, but I think we've previously decided that should not be included. There was also a point about the flexibility to include the comparatives in the notes rather than on the face of the financial statements. The next question was around expressing compliance with INPAG. 73% of those who responded to the question didn't identify any unintended consequences. The majority of the comments that came back on this were really outside of the scope of IFR for MP outside of INPAG itself, and really around how jurisdictions might implement it. There was the question about the cost of adoption, which we've seen come up many times before. So we think that many of these we've addressed in ED3 already. We don't see any major issues in this. So that the first question really is whether TAG members have got any views on how we intend to address the responses received in relation to that section.
Okay, thanks, Karen. Open up for comments. Yeah, Daniel.
I'm not sure if this is the right moment to ask about this, but I don't know if the format of the balance sheet financial statement would be the same for every kind of entities of if the entity uses a fund account method, would be have a different presentation of the option of presentation in the face of financial statement. I don't know if it's clear.
Karen, back on that.
Yeah, so actually this really comes up actually in the next section, which is on section 4 on the statement of financial position. So I think our general approach sort of is consistent with IFRS for some reasons, where we set out the information that is required to be presented, and there are some illustrative formats, but I don't think we say it has to look exactly like this. So there may be a question, and maybe this is why we've been linking it to the response to the illustrative financial statements in ED3, in terms of getting comments about that, about whether that format is sufficient or not, or whether there are other examples that are needed. So we haven't really addressed alternative formats, but I think we will wait to get the feedback from ED3 before doing any further work around that.
Okay, thanks, Karen. I mean, has that sort of moved us on then to section 4? Are there any other?
Yeah, so I think the key question we had here was around the split between current and non-current assets, and whether that should be required by all entities because we permit a liquidity presentation. I think that was generally supported. Some felt that we should only we shouldn't permit the liquidity presentation, but we don't see any downsides to allowing that as an option. There are also questions about the operating cycle, but we include an assumption around that. So we think that is sufficient. There were, in terms of sort of the fund accounting side and assets with and without restrictions, there were some respondents who thought that non-current assets should be separated into restricted and unrestricted categories in the notes, noting that one respondent felt that would be impractical to do that. But we have discussed that previously. And in fact, we do include that in the illustrative financial statements. So there's two questions for the tag. One is about whether tag members think we need any additional guidance around the operating cycle, and the other question is about should we be thinking about additional disclosures around grant funded non-current assets. We've obviously, where there's restrictions, they appear in the movement on funds note, but whether there should be something additional around that.
Okay, thanks, Karen. Jenny, to you.
Thanks. Mine was on the second of those, and I suppose I wasn't totally sure why we were highlighting grant-funded assets as opposed to, the donation-funded assets or what or donated assets, and so I suppose I wasn't quite sure what the features were we were trying to highlight, and was it sort of in the PP&E note that we were trying to say these assets have been financed in different ways, which didn't necessarily seem like to me like we necessarily needed it, or was it more that we were trying to highlight perhaps that there's some kind of contingent liability there, and in some cases, if certain conditions don't continue to be complied with, either the asset or some cash representing the current value of the asset might need to be given back. So I just wasn't quite understanding why we were highlighting one subset rather than potential other ones, I'm afraid.
Can I come back on that?
Yeah.
So yeah, I mean that's poorly worded on our part in terms of what we were intending in there. What we were looking at really is where there is an asset that has that is part of funds with restrictions. So it cannot be used at the total discretion of the MPO. We were looking at something that might be in the notes to the financial statements to provide clarity about which of the non-current assets can be used freely by the MPO and which of those assets have got some form of restriction attached to them that mean that they can only be used for limited purposes. So, if you've got a fleet of vehicles, but 90% of them can only be used for very specific purposes, that might be important information. So
Yeah.
that's so apologies that wasn't clear, but that's what we were getting at in this.
More about the use the asset can be put to, and whether that's
Yes.
So where you might end up perhaps with assets that are only partly utilized because you can't do enough of the relevant activity for other reasons to make
Yes.
full use of it.
Yes,
Right.
absolutely.
Okay. That makes sense. Thanks.
Okay. Jeff M.
Yeah, I was going to raise some similar questions to what Jenny just did. And regarding your answer, Karen, I just want to make sure I'm clear. The reason that the focus is on non-current assets that have restrictions as opposed to current assets that have restrictions is what concerns about impairment, or I'm just trying to think about why the focus on non-current assets.
So this goes back to potential complexity. So we made the decision when we first framed this from ED1 that we would not require the statement of financial position to be split line by line between those that have restrictions and not. So that's what we included in ED1, and so that's why it's not currently there. But we have picked up and sort of through discussions and as I've come back in the feedback to ED1 that people would find information about non-current assets in particular useful to a useful piece of information to disclose. And I can see Sam is not on the call, but I know that Sam is one of the people who feels or has seen that this come up in discussions that she's been involved in, where there is a strength of feeling around this. So I think what we'd seek, we have not included that as a disclosure requirement at the moment. We have got an example of it as in the illustrative financial statements, but we don't currently require it. So I think there is a question about for the statement of financial position or indeed for section 17 on PP&E, and it might be appropriate to wait till we get the feedback on that section about whether there should be an additional disclosure for these types of assets.
Okay. I was just thinking about donated inventory and other types of assets as well. I just want to see what the thought was as to why the concern is limited to non-current assets. Okay.
Okay,
Okay.
thanks.
So shall I take us into the next
Yeah.
section, which is on the statement of income and expenses? The first question was about the name of the primary statement. 79% agreed with the statement of income and expenses. There were alternatives, but as I've previously said, we permit the use of an alternate name if, as long as that's not misleading, if an NPO so chooses. The next question was about the use of the terms surplus and deficit. 93% supported those terms, and certainly when describing when there's an excess or whether there isn't surplus and deficit were the terms used. I think we got most comments about, if you like, the bottom line description. In the private sector, obviously profit or loss is well understood. There were some concerns about surplus or deficit as the sort of bottom line term, and whether that would be how that would be understood by users of the financial statements. And so there were some alternatives that were put forward around that. I think as the Secretariat, I think we are open to a different end result terminology if we can come up with one that actually is suitable. But if we do have an alternative, we wouldn't want it to be something that people could choose. We'd want it to be a term that is synonymous with profit or loss, that everybody understands as being the primary result for the organization. The next question was about the presentation of with and without restrictions. I think we've addressed that and we've dealt with that in ED3. And there was also a question about the ordering of the income and expenses within the statement of income and expenses. And this question actually had in terms of all of the financial statements, the lowest agreement rate, with 58%, still a majority, but the lowest, agreeing that you can choose to present it whichever way you want, and 42% disagreeing. And those that disagreed wanted to see income presented first in the financial statements, and that was where they were coming from on it. So we have two questions here. One is about the presentation issues raised, whether there's any thoughts around that, and the other one is about the terminology for the result for the period, whether we stick with surplus and deficit or whether we should explore alternatives to that.
Okay. Any comments? Yeah, Jeff M.
Let me start with surplus and deficit. I think those terms are very commonly used and very commonly understood in the nonprofit sector. And I think, they're close enough to being synonymous to profit and loss. I don't think it's going to cause confusion among those jumping back and forth between the sectors in terms of reading financials. So I would suggest not changing that.
Yeah.
On the ordering of income versus expenses, I agree that most would probably start with income because it is more typical. When we were discussing this years ago and looking at our financial model, I know there was some discussion that starting with expenses could be more relevant for nonprofits who, at least that's the way they, in my experience, go about budgeting. It's what do you want to do, price it out, and how we're going to fund it. So I don't see any reason to preclude it.
Okay. Thanks, Jeff. Daniel?
Definitely, sorry. Yeah, absolutely. I agree with the presentation, starting from income and after expenses. And about the result, I prefer to continue with the proposal is surplus or deficit. I think is the best way to present or to call this line.
Okay, thanks, Daniel. So I'm not hearing any pressure to move away from surplus or deficit. I mean, I think you can understand the preference in terms of income first, but I think there is that, that question as to whether that's always entirely appropriate. Any other thoughts on these points then? Okay.
Great. So the next section is section 6 on statement of changes in net assets. We had two questions on this. The first question was about the creation of this statement separating out from the statement of other comprehensive income. 87% supported the proposal, but some disagreed. Some felt that we should be consistent with the IFRS for SME standard. There were concerns that this might prevent NPOs from applying some of the accounting treatments, although there were other views that OCI was not relevant to NPOs, and therefore, why did you need this statement at all? The second question was about whether funds with and without restrictions should be columns on this statement. 96% supported the proposals. The key concerns were around reliefs for smaller organisation, and there were some matters of detail in there around the drafting as well. One of them being that we didn't clearly identify that movements in reserves would be an item that should appear on the statement, and we will pick that it's in the illustrative financial statements, and we will pick it up in drafting going forward. So the question here is about whether the tag members have got any views on the responses, and the fact that we don't plan to make any amendments other than the 2 points that listed there about the clarification around reserves and the amendment to the glossary.
Okay, thanks, Karen. Jenny.
Thanks, Ian. I mean, I see that the response was that people supported not having OCI, but I guess I feel I should still say that I continue to think we should have OCI separately in those instances where it is relevant. I think it's better to separate those items. Obviously, where there aren't any items of OCI, you don't need to present it at all. But I mention it, but I could see that that wasn't supported by the most of the respondents.
Karen.
Okay, right. Section 7, statement of cash.
Oh, sorry, Daniel.
Excuse me, I have to go back to the same point again, but I'm really a little concerned about the treatment, especially when we don't use fund accounting, about the donated capital assets. I don't know if it would be good to give the option, at least, to take this kind of assets directly to net asset or to income, because this point makes a lot of discussion, and some entities that more or less often received that kind of assets. So I think it would be advisable to give the option, at least, to evaluate how to treat this item, because for some kind of entities, maybe it would be better to go directly to income, but other entities would see better to take this to the net access directly.
Karen.
I was say, can we defer? I note the point you're making, Daniel, but can we come back to this when we're looking at the responses to revenue on ED2? So we're in the process of analysing the responses to that, and there is a question related to the treatment of donated assets. So I think maybe that's the point to kind of consider that when we can look at it in the context of the responses we received as part of the consultation.
Okay, thanks, Karen. I think that's the right way forward.
So statement of cash flows, there was a question about the separate presentation of cash from donations and grants on the face of the statement. 98% of respondents agreed with that. But there was obviously the noting that would only work for the direct method presentation. And so the Secretariat is proposing that whichever method is chosen, that information should be disclosed. The next question was about, which we've already addressed previously, was about donations and grants received for the purchase of or creation of property, plant and equipment. And 68% agreed with the proposal that we had. But when we discussed this, when we were considering the illustrative financial statements, it was agreed that the guidance to include capital grants in investing activities would be removed and be included as part of operating activities on the cash flow statement. So that is what we've included in the illustrative financial statements, and obviously we'll wait to see what feedback we get on that. The third question was about permitting the direct method or the indirect method. 90% agreed that both should be permitted. And of those that disagreed, which was only 3 individuals, 2 voted for one and 1 voted for the other. So we are proposing to continue to allow either of those to be permitted. Just one other point to be noted, there were some comments about use of the term investing activities and financing activities and the degree to which they resonate with NPOs. But we noted that sort of no alternatives were proposed. So it would be useful to get TAG members' views on whether we should do some additional work to explore that a bit further.
Okay, thanks, Karen. So Daniel, I think you wanted to come in on question 7.
I apologize. Before I forget, may I go back to the statement of change of inequity? Sorry.
Yeah.
Okay.
Okay. Change in net assets.
Net assets, yeah.
Let's say, before I forget, the IFRS for SMEs gives the option not to present this statement, when there's no movement in the equity of the year. So I don't know if we're going to do the same, or what do you think about that? Because I don't have this very clear.
Yeah.
That's it. Excuse me.
Yeah, no, I think that's a really good point. I think if there are no changes other than the result for the period, then I don't see that there is a need to present this statement, as long as it doesn't affect the mandatory columns of funds with restrictions and funds without restrictions. So we can certainly consider that in the final drafting of this section.
Okay. Any disagreement with staff's proposed way forward then on questions 7 through 9? Jenny.
Yeah, thanks, Ian. I suppose just sort of coming to it again, I wasn't quite clear why we were requiring the cash flows associated with grants and donations to always be disclosed. We've got compared to other revenue sources. And I suppose, and I hope I've got this right, I was kind of thinking that in a for-profit context, I don't think the cash flow from revenue with contracts is required to be disclosed. I might have got that wrong, but I didn't think so. So I just was sort of reflecting again why I wasn't sure why we need the cash flows separately disclosed when we should already have it as a breakdown of sort of incoming resource, income on that basis. Or if we do need the cash flows as well, then do we need all sources of income to be separately identified in their cash flows?
So the thinking behind this when we developed these proposals was thinking about the needs of donors who quite often want to see that where their cash has gone and that it's been received. So that was the thinking about the inclusion of those proposals. I think you make a good point, Jenny, and I think maybe we need to come back and revisit this in the light of what we've done now with the supplementary statements. Because those didn't exist when we formulated that proposal, and I think we only want disclosure once around this, and I think we possibly need to I think we might need to come back, particularly now this is in ED3 as well, see what feedback we get on that, and then just re-examine where is the best place to show this, and making sure that we're not duplicating requirements.
Yeah, thank you. I'd forgotten about that history, so thank you.
Okay, thanks. That Jeff G.
Just a quick comment. I'm working on a cash flow project here in the US, so it's kind of near and dear to my heart. But I think Jenny has a good point. You don't have to disclose under the direct method. You probably would be disclosing cash revenue, but and ordinarily under the indirect method, you wouldn't. So I guess that's the question. I mean, as a supplementary disclosure, you might want cash donations, but that's a direct method. That's direct method, and kind of mixing the two could be problematic.
Thanks, Jeff. Jeff M.
Yeah, and again, going back, Karen, you already kind of touched upon this, but if the purpose is to give donors comfort that their donations have been received, that's at a very different level, an individual donation than the overall organization. So again, you mentioned the supplemental schedule, and that's probably where something like that belongs, if anyplace.
Okay, so I think we just need to revisit that, but noting the comments there about direct and indirect method and what would be available anyway. Okay.
So moving us on to section 8, which is the notes to the financial statements. We hadn't made any changes there, and we were just seeking any feedback about whether there were any things that we may have omitted in terms of our review. 80% agreed that no further changes were needed. The disagreements were suggestions of additional specific disclosures, or suggestions that there needed to be more NPO specific disclosures. We believe that much of this it was because there were no illustrative financial statements. It was a template rather than populated, so people couldn't see what the disclosures might look like. We think the illustrative financial statements will probably have answered many questions, and so it's important to see the feedback on that. And some of the requirements for additional disclosures have also been superseded by the subsequent exposure drafts as well. So we'll revisit this once we get the response to ED3. So we're not planning to include anything specific or work on anything specific in the interim. Just checking that no one disagrees with that.
I think we're fine with that.
Okay. The next sort of really meaty bit is section 9, which is consolidated and separate financial statements, where there were a number of questions in here. The first question, the first question related to whether the application guidance was sufficient to explain how the control principles apply to NPOs. 88% agreed with that. There were some specific situations where additional guidance was sought. The next question was about the inclusion of the rebuttable presumption. 93% agreed with the rebuttable presumption. Again, there was some feedback about the drafting principally in terms of how we intended that to apply and to make things a bit more simple in terms of how it's framed. The next question was about additional application guidance that have been produced around the application of the fundamental characteristics of faithful presentation and relevance to consolidation. 84% agreed that the AG was sufficient. I think there were concerns that the application guidance might be misused in terms of people carving themselves out from consolidation. So that point was noted. But it's probably useful at this point to say that we did see in the responses concerns about the consolidation of for-profit entities into a non-profit organisation. And this question about, I guess we probably covered it before in terms of dissimilar activities. If I can sort of paraphrase that in terms of, is it appropriate to consolidate organizations that are doing different things? But I think in general people were supportive of what's there. There was a question also about the use of the terms controlling entity and controlled entity, where we'd replaced terminology. Again, that had majority support with 83% supporting that. Some thought that it was better understood by NPOs and really liked the change. There were some who thought that it was unnecessary and that it was clear enough in IFRS for SMEs and didn't need to be amended. So there are 5 questions here which we might kind of cover all in one go. So the first is that generic point about the consolidation of for-profit entities into NPOs. Is there any reaction to that? In terms of the rebuttable presumption, we'll look at fine-tuning the drafting alongside the final drafting of the IFRS for SMEs accounting standards. So any concerns with that approach? We're not proposing to change controlled entity, controlling entity or beneficial interest. Any concerns about that? And then the responses to the additional guidance on applying the control principles, where we're looking at the potential for more illustrative examples or education material. I think we're more in educational material, but thoughts about that approach. And similarly, thoughts about the application guidance relating to faithful representation and relevancy, and noting the concerns about misuse, whether we should replace the guidance we've got with just cross-references to section 2. So a range of things, and I'm very mindful of time, so we've probably
yeah, so we can just take any disagreements with the proposed way forward on those questions. Okay. So take us into the final question then.
And then the final question is on section 10. Again, we hadn't made any changes to this. There was no disagreement with the proposal that we didn't need to do anything extra. There was a suggestion that the implementation guidance could provide an example of a prior period error. That isn't in the current illustrative financial statements, but we are proposing when we update those to include an example of a prior period adjustment. But that's the only issue on there. If there are any final comments on that?
Okay. Anybody disagree with that? Jenny?
Just a thought on that prior period error. I mean, I guess one would hope that it wasn't something that MPOs were reporting each year, and so I wonder if it would be better to have that just as a sort of extra bit separately rather than part of the main illustrative financial statements. Thanks.
Okay. So Karen, if you can have a look at that.
Yeah.
Okay. So thanks. That's covered a lot of material. Karen, do you want to just talk
Yeah.
about next steps?
Yeah, no. So as I said, on this particular paper, we'll look at redrafting after we've had the responses to ED3. With that exception, we will be kind of bringing these papers together with the remaining sections that were covered in ED2 to the TAG meeting in September. So there will be quite a lot of papers for this with final drafts or proposed final drafts of sections. Given the debate about structure, we will be continuing with the existing numbering for now, and we'll resolve that at the next meeting. So I do anticipate that there will be a fair bit of material, but hopefully not too many challenging questions attached to that. Obviously, the biggest ones are going to relate to revenue, which will be a key topic for us to consider. I know that a number of members are still ascertaining whether they are traveling to London or not, and are going to come back to me about whether they will be attending the TAG meeting face to face. There are, however, a number of members that I haven't heard from yet, one way or the other, and I'm conscious of time and the need for visa letters, etc., but needed by some TAG members if they are planning to attend. So I would be grateful if for those members to get in touch and let me know what the current situation is, so that we can look at what support may be needed.
Okay. Good. Well, Karen, thank you very much to you and the team for a good set of papers that covered a lot of ground and helped us through those discussions. Thanks everyone for taking the time today to attend the call. As ever, if you have drafting comments, please send them through to the Secretariat so that they can take account of that. And look forward to seeing you at the next meeting. So thanks very much, everyone.
Thanks very much. I hope to see you all in London in September.